Welcome back, everyone, for another deep dive. This time, we're going to be diving into India's new invoice matching system.
IMS.
IMS. And we've got a fantastic set of FAQs that were just released last month that are really going to help us unpack all the nitty-gritty details of how this whole thing is going to work.
Yeah, you're right to say interesting because, these FAQs actually reveal a potential shift in the power dynamic between suppliers and recipients.
Now, that's definitely something I want to unpack as we go through this. But first, can we sort of set the stage for our listener?
Absolutely.
Remind them, when this whole IMS thing went live.
Of course, IMS became operational with the October 24 GST R2B return period, meaning invoices from October onwards are now being processed under this new system.
Got it.
And November 14th marked a crucial milestone.
It
was the first time that taxpayers saw a draft GST R2B generated based on IMS actions.
Right, actions.
Yeah.
That's a word that we see popping up a lot here.
Mm-hmm.
What kind of actions are we talking about, and how much control do recipients actually have?
Well, here's the key point. Acting on IMS is not mandatory. However, it empowers recipients to either accept or reject invoices, which directly impacts their input tax credit claims. This is a huge departure from the previous system.
That sounds great in theory, that, there's this new flexibility. But doesn't that also put a lot more responsibility on the recipient to really scrutinize every single invoice that comes their way? I mean, that sounds like a potential headache.
It absolutely could. Incorrectly rejecting an invoice means losing out on valuable ITC. Imagine the potential for disputes and delays. So that's why understanding the nuances of the system is so crucial.
So let's say a recipient, makes a mistake and rejects an invoice. Is there any way to fix that before it's too late?
Thankfully, yes. As long as you catch the error before filing your GSTR3B, you can go back, accept the invoice, and recompute your GSTR2B. So that's a crucial safety net, especially as we approach that November 30th deadline for claiming ITC for the 2023-24 fiscal year.
That is a relief because we know how much emphasis is placed on, getting those ITC claims in on time.
For sure.
So this added layer of control also raises some questions for me in terms of how recipients might use this strategically to their advantage.
Absolutely.
Could we see a situation where a recipient might use the threat of rejection
potentially
to ensure that their suppliers are, fully compliant?
Exactly.
With all of the
invoicing requirements.
IMS is giving recipients a new tool to enforce compliance from their suppliers.
Yeah, it's very interesting. So before we get too far into, the strategic side of things, I do want to make sure that our listener understands the technicalities.
Of course.
How does this thing actually work? What's happening behind the scenes? So at its core, IMS relies on sophisticated algorithms to match invoices uploaded by suppliers with the corresponding details reported by recipients in their returns. It's constantly cross-referencing data points, checking for discrepancies, and flagging anything that seems out of place.
Got it. So if there's a mismatch,
that's
when the recipient gets the option to either accept or reject the invoice.
Precisely. And this matching process goes beyond just basic information, like invoice number and amount. It can also take into account things like tax rates, line item details, and even credit notes.
Speaking of credit notes, those have always been a little bit tricky. Even in the old system.
Yeah, for sure.
How does IMS handle credit notes? Especially in situations where the recipient might have already reversed ITC.
That's a great question, and one that FAQ Q-Tech 10 addresses directly. The system is designed to recognize these situations and prevent any double reversals of ITC.
So if I'm understanding you correctly, if a recipient receives a genuine credit note for an invoice they've already reversed ITC for, accepting that credit note in IMS won't further reduce their ITC.
Exactly. The system's smart enough to know that you've already taken the hit. So it adjusts accordingly.
That's reassuring. It seems like the developers really put some thought into how to handle these more complex scenarios.
Absolutely.
But what about actions taken by the supplier?
Right.
How do those get factored into this whole IMS stance?
That's where things get even more interesting. Supplier actions can really have a direct impact on what recipients can do within IMS. Let's take upward amended invoices and debit notes, as discussed in FAQ #8.
Those always seem to cause a bit of confusion. What's the key takeaway here for recipients?
It's all about timing. Recipients can't actually act on these amended documents until the supplier has formally filed the amended record with the GST system.
So just saving it on their end isn't enough. That seems like it could create a bottleneck.
Precisely. Imagine a supplier amends an invoice but doesn't file it right away. The recipient's kind of stuck in limbo. They can't accept or reject the changes. And that could potentially lead to mismatches and delays in their ITC claims.
Ugh, that does not sound fun.
No, it doesn't.
Are there any scenarios where a supplier might, intentionally delay filing an amended invoice?
It's possible. Think about it. If a supplier has issued an upward amended invoice or a debit note, they're essentially increasing the recipient's tax liability. So delaying the filing could give them a temporary cash flow advantage.
Wow, that's a really interesting strategic angle I hadn't considered. It seems like IMS is adding a whole new layer of complexity.
It is.
To this supplier-recipient relationship.
For sure. And that's why clear communication between both parties is going to be more critical now than ever before.
Right. Before we move on, let's touch on FAQ Shannon 9.
Okay.
This deals with a specific situation where a supplier issues a credit note to fix a mistake instead of amending the original invoice. Why is that problematic under IMS?
It all comes down to the system's ability to kind of connect the dots. When a supplier amends an invoice directly, IMS can seamlessly link that action to the original record, ensuring that everything's tracked correctly. But when a credit note is issued separately, that link can be broken.
So what's the key message here for suppliers?
Whenever possible, stick to amending the original invoice directly rather than issuing a separate credit note. It makes the whole process smoother and reduces the chances of errors or mismatches cropping up in IMS.
Makes sense.
Okay.
Now let's shift gears and delve a little deeper into the world of credit notes from the recipient's perspective.
Okay.
This is where things get really interesting. Remember we talked about how recipients have the power to either accept or reject invoices?
Yes.
Well, the same principle applies to credit notes.
Right.
But there's a twist.
There is.
I love a good plot twist. What's the catch?
Unlike regular invoices, credit notes can't be left pending, and IMS FAQ Shag 1010 highlights this explicitly. Why? Because from the supplier's perspective, the issuance of a credit note already signifies an adjustment to their outward tax liability. So keeping it hanging in IMS wouldn't align with the system's overall logic.
So if I'm a recipient staring at a credit note in IMS, my only options are to either accept or reject it.
Exactly. And as we've already discussed, every action in IMS has a consequence. Rejecting a credit note can trigger some interesting ripple effects, which brings us neatly to FAQ #11.
Okay, I'm all ears. What happens if a recipient decides to reject a credit note issued by a supplier?
In a nutshell, the supplier's tax liability actually increases.
Okay.
But here's where it gets interesting. This increase doesn't hit them immediately in the same GSTR3B period. Instead, it gets bumped to the subsequent tax period.
It's like a delayed reaction.
It is. And it highlights how IMS is designed not just to match invoices, but also to ensure accurate accounting of tax liabilities over time.
Right.
But for suppliers, this delayed impact can create headaches if they're not carefully tracking these rejected credit notes.
It's like a game of tax chess, with moves and counter moves playing out across multiple periods.
You could say that. And understanding these intricacies is crucial for both suppliers and recipients to navigate IMS effectively.
Okay, deep divers.
Yeah.
Let's pause here for a moment and recap what we've learned so far.
Sure.
IMS has introduced a whole new level of control and responsibility for both suppliers and recipients.
Yes.
And we've seen how actions within the system can have both immediate and delayed consequences. It really feels like IMS is ushering in a whole new era, of tax compliance in India.
Absolutely.
But beyond the technical aspects, I'm curious about the broader behavioral shifts.
Yeah.
This system might trigger
That's a big question.
with this newfound power in the hands of recipients.
Right.
How might they wield it?
Right.
I mean, are we going to see, just a surge in recipients, meticulously scrutinizing every invoice that comes their way?
Yeah. Certainly a possibility.
I mean, could this lead to an increase in disputes, delays, or even like a breakdown in trust between suppliers and recipients?
If recipients become more assertive in using their ability to reject invoices, suppliers might feel the pressure to really step up their game when it comes to accuracy and compliance.
So that's not necessarily a bad thing.
No, not
if
that.
IMS incentivizes, better record keeping,
right,
and more transparency on both sides,
absolutely,
that could ultimately benefit everyone.
The entire ecosystem.
Right. But let's play devil's advocate for a moment.
Okay.
What are some potential downsides to recipients having this much control?
One concern is the potential for misuse or abuse of this power. Imagine a scenario where a recipient intentionally delays accepting invoices just to gain a short-term cash flow advantage, even if those invoices are perfectly legitimate.
That's a good point. So it seems like finding the right balance between empowering recipients and preventing, misuse is going to be critical.
It is. Finding that balance is key.
For the long-term success of IMS, and that's where, clear guidelines and effective communication and maybe even some dispute resolution mechanisms
for sure.
will come into play.
Those are all going to be very important.
It's like IMS is a powerful engine, but we need to make sure it's properly tuned.
We do.
To maximize efficiency and minimize friction.
Yeah, that's a great analogy.
And just like with any new technology, there's going to be a learning curve.
Absolutely.
As everyone adapts
to
this new way of doing things.
For sure.
Well, deep divers, we've covered a lot of ground today.
We have.
From the technical intricacies of invoice matching to the potential behavioral shifts and the strategic considerations.
Yeah.
IMS is clearly more than just a system upgrade. It really is a game changer.
It is.
That has the potential to reshape the entire landscape of tax compliance in India.
Agreed.
And it feels like the journey's just begun.
Yeah, it really does. As IMS evolves and we gather more data, we're likely to uncover even more nuances and implications.
So to our listeners, we say this: stay curious, stay informed.
Yes.
And don't hesitate to dive deeper into these FAQs and other resources to really get a full understanding of how IMS might impact your business.
I'm going to set it better myself.
Until next time, happy matching.